Hi, this is Charles Kelly, author of the book Yes, Money Can Buy You Happiness. It's a book I wrote because a lot of people go around saying, oh, money doesn't buy you happiness. They're normally people who have got loads of money and more money than they know what to do with, and they kind of want to make you feel better. And then there's this saying which I cover here, um, this old nut that says, money is the root of all evil. I actually cover that. I cover that money is the root of all evil, right? It's been pumped into us from children. And, if you study the Bible, you'll know that many of the most famous stories and the most famous people in the Bible, for instance, Abraham, Joseph, Solomon, were immensely wealthy. And, in the Old Testament, they talked about God giving wealth to people and blessing them with wealth. So this idea that money is that evil is just wrong. In fact, the real quote is, "For the love of money is the root of all evil," not "money is the root of all evil." And it's actually it actually says, "For the love of money is the root of all evil," and it's found in Timothy 6. And so this is they've actually dropped this for the love, and it's sort of ingrained in people's head that money is the root of all evil. But you try telling somebody that is hungry, starving, maybe he's a refugee, oh, money doesn't buy you happiness. No, it just doesn't add up, does it? Of course, money can buy you happiness. It doesn't mean it will buy you happiness. It doesn't mean it always will buy you happiness, but it can bring you security. It can bring you fun. It can bring you joy into your life. It can help you to do other things for other people. If you can't even look after yourself, if you haven't got enough money to look after yourself, you can't give anything to charity, you can't give anything to your local church, you can't help other people, you can't help your family member when they come to you and say, look, I need a loan, I need help here. Of course you can't. So don't tell me that money, yes, money can buy you happiness. That was the title I wanted. And it sort of surprises people, but that's why I wrote the book. Now, talking about money, we've been saying for a little while now that interest rates are likely to go up. A lot of economists have been predicting it. The markets have been predicting it and have moved to account for an interest rate rise. But the Bank of England that decides these things, not the government here, the Bank of England, has decided to hold rates at the record low of 0.1%, which is almost zero. But it hinted that in the coming months it will increase rates. And this has surprised many people, but I still think by the end of the year it could change, early January at the latest. So we have a thing here called the Monetary Policy Committee. In the US, you've got the Federal Reserve, and you've got in Europe, you've got the central bank there. They decide on these interest rates, but this committee meets once a month. And on this Thursday, which is today, policymakers met and voted 7-2 in favour of no change from the current record low of 0.1%. And the Governor of Bank of England said, he's Andrew Bailey, said the decision had been a close call. Well, 7-2 doesn't sound close to me, but he said at the moment they don't see any value in raising interest rates, but they're waiting to see how the job market copes with the end of the job furlough scheme. So the UK then has resisted calls to hike rates amid inflation expectations by the end of the year of 4%. And we see this in many major economies, in Germany and America, where interest rates are inflation is running at 5%. That means prices have gone up by 5%. That means money is being devalued each year by 5%. So they're going to have to do something. And a lot of people say, oh, high interest rates, what are they? And if you're still young, maybe a millennial or younger, Generation X, whatever, you've probably never seen high interest rates, high inflation rates. You've been used to this low interest rate environment. But I've seen it. I've seen inflation at over 20%. I've seen interest rates on my mortgage go from 12% to 16.25% in the time it took me to agree the price on the house and move in because of high inflation. That was a time when inflation was running away, and that was the biggest fear in Western economies. So what did the government, Margaret Thatcher, do? She hiked up interest rates and then started to bring inflation down. For me, it was a disaster. I was, my payments had doubled on my mortgage. It was like, I can't even afford this. I'd got the mortgage on the basis that I could just about afford what I was being quoted, and then it went up again. And it was incredible. But I stuck with it, and after 2 years, that flat that I only bought for £16,000, I eventually sold it for, after just 2 years, £25,000. Bought a house and sold that a short while later for a profit as well. So property is still a good investment, provided you know what you're doing and you're buying the right stuff. But I'm just saying about interest rates. If you're young, you may not have seen this, but going back to those days, you would have thought 10%, 12% was quite a good rate for a mortgage. In fact, a lot of people fixed their mortgages at 10% for many years, and then when interest rates started to come down, they were panicking. Don't think that high interest rates could not come back again. And low interest rates are not good for everyone. They're not good for savers. It doesn't always help the economy to have near zero rates. So I would expect them to be going up in the very near future. And talking about money again, the US has started this thing called tapering, which is reducing the amount they're buying bonds by. At the moment, they're pumping money and printing money into buying bonds, US Treasury bonds, at $120 billion per month. Yes, 120 billion. I said $1 billion per month. They're planning to reduce that by 10 billion. So that is expected to take maybe a hit on the economy somehow. There'll be less money pumping into the economy, and we shall see if that does trigger anything. We'll have to see exactly what will happen there. This is big economics. Worry about your own economics, but do look at the big economics, but look at your economy and what you're doing to boost your own economy. That's what really counts, because it's hard nowadays. You can't just expect, I think, to just work hard, go to college, get a degree, put a bit of money aside and hope that you're going to be financially free. It just won't happen. I do agree with saving. You must save money. You can't just spend everything you earn, but you need to learn about investment. You need to learn how to multiply your income, how to get multiple streams of income and invest your money. At the time I bought that first flat and sold it for 10,000 more, I would never have made that money just by working harder. It was like money that's almost come out of thin air because I was living in the flat at the time as well, so I wasn't paying rent. But just think about that. You need to learn more than just how to put your money in the bank. So have a look at that. Anyway, other things on that I've been talking about this week. Buy-to-let property demand dropped in London by 60% as Chinese buyers dry up. I don't expect that to last. There's still a shortage of properties in the UK. There's still more people looking for properties and looking to rent properties than there are properties available. So there might be a temporary dip in London, but London will always come back. And financial education is more important than anything else. It's the key to not only building wealth, but keeping wealth, keeping your money, preserving your wealth. So do check out my free content on iTunes, on my podcast, on YouTube, on my channel. Do like, subscribe, share the free content to get it out to more people. And if you want to go deeper and learn more about becoming financially free without necessarily working any harder than you are now, do check out the link below and I'll take you through a program, free training that can take things deeper than I can do on a 10-minute video here. So thanks for listening. Have a great evening. And remember that financial education is the key to building and keeping your wealth.